also just making sure you want to sell the business. Many entrepreneurs don't think about like what happens after, and what am I doing? And being prepared for that. I think recently we've seen a lot of different entrepreneurs. I mean, Adam Newman is one of them trying to buy his company back. There are a lot of founders that I met after the sale who have bought their company back because you go from operating at such an intense speed and then you're like, wait, what, like, who am I? It's almost your entire identity. And it's something that a lot of entrepreneurs maybe don't feel comfortable sharing. But it's certainly not something that I've seen a lot of people talking about unless it's in sort of like, a one-on-one conversation.
Hey everyone, this is Prashant and I'll be host of the VC 10X podcast. And today we have Jessica Schaefer with us. Jessica is the founder of Bevel, a trailblazing communications firm representing clients managing over $500 billion in assets under management. In 2023, Jessica secured a landmark deal with the acquisition of Bevel by Avenue Z. In this episode, we talk about Jessica's story and the journey of building Bevel, how they acquired their first customers and scaled the business over time. What does it take to acquire high profile clients like Greycroft, Acorns, etc.? Is there a product market fit equivalent for agencies? Getting an exit, the process, negotiation, how long it takes, and handing over the business. When is the right time for a business to look for an exit, and what exit multiples can be considered for high cash flow businesses? What's the aftermath of an exit? What's next for Jessica? And so much more. So without wasting any time, let's dive straight in. This episode is sponsored by my own podcasting agency called Podcast 10X, where I help VCs start and run their own podcast. While I was running VC 10X, this podcast that you're listening to right now, I asked my VC guests, why don't you start your own podcast? I mean, it's the best form of marketing for VCs. As they say, VC is a people play more than even a capital play. A podcast enables you to put your people at the front, your portfolio founders, your partners, and co investors. It's a great way to build a brand and win competitive deals. It activates all your marketing channels in a single shot, be it YouTube or blog post or newsletter or social media. Everything gets activated in a single shot. And I get the same response from all the VCs that it's a lot of work and we don't have the time for it. I said, all right, let me handle the work for you, from pre recording, editing, publishing to making social media clips. All you have to do is show up on a call, hit record, do the recording using the well researched outline we provide you with, and you're done. We handle everything else. You know what they said? All right, let's give it a shot. So if you are a VC and want to up your marketing and branding game, I'd love to work with you. And if you're thinking there are too many VC podcasts already, remember there are way more VC firms out there. And if you're not standing out, you're losing out. So if you want to work with me on starting your podcast, go to podcast10x.com and book a call today. I'll add the link in the description and show notes below. Look forward to working with you. Hey Jessica, so good to have you on the VC10X podcast. How are you doing?
I'm good. How are you?
I'm doing good as well, and many congratulations on the recent acquisition of Bevel PR. And glad to
Thank
have you
you.
here. Yeah,
Happy to be
totally.
here.
Awesome. Yeah, to start things off, can we first have the story of your background journey and how you started Bevel PR, and then we'll take it from there.
Sure. Well, it's interesting. I never set out to be an entrepreneur. I actually started my career on the corporate side. I spent 5 years at Moody's, the ratings agency, after the subprime mortgage crisis, rebuilding their image because they were largely blamed for the mortgage crisis. And then I did my MBA in investment analysis, and I wanted to be an investment banker. I didn't think that PR attracted talent. A lot of people who go into PR, they want to do beauty PR, consumer PR. There aren't a lot of people who do PR, in the financial markets or in venture capital, private equity. And so from my perspective, I was sort of exploring other opportunities, and people said, well, you're so PR. And I thought, what does that mean? They're like, well, you have personality. You shouldn't be sitting behind a spreadsheet. And so after, finishing my MBA, I actually moved into a role in global sales, selling structured finance solutions to Goldman Sachs, Mizuho, all of the different banks. And then from there, I was sort of thinking about what's next when I got a call from Point 72, which is Steve Cohen's uh, $30 billion hedge fund. Then it was a family office. And, I thought the opportunity to work for him, who is one of the most well regarded traders in the world, would be an incredible opportunity. And so I ended up going to Point 72. I spent some time there, building the brand. Formerly, it was SAC Capital. And so they needed help just reimagining what the story was. And they launched a venture capital fund. Steve was investing in a lot of different technology companies, and I just started working with these tech CEOs and absolutely fell in love with it. Super fun. It was before fintech was fintech. It was still financial technology, and I saw an opportunity to get in very early into the tech world. And this was at the time when like everybody all of a sudden didn't want to go the investment banking route. Everybody wanted to work at Google or Amazon. And so I thought, how do I get into that world and sort of like hit the wave at the very beginning?
Right, totally. That's very interesting story. So that's how you started Bevel PR, is it? Or this was the start of your journey into PR and doing it for others, and then you later formalized it into a PR firm.
Well, that was the start. It was really, I think, every business, whether it's in healthcare or venture capital or whatever, you have to see a market opportunity. And so I already knew I was very gifted at public relations, but it has to be more than that to start a firm. And so what ended up happening was the CEO of Acorns, I worked on the strategy when Steve invested, and he said, what you did in 3 days, no one has done in 3 years. Would you want to join as chief communications officer? And another CEO was like, wait, don't move to California. I want you to work on my company. And Steve and Michael Sullivan, who is very close, he's his number two over at the firm, they were sort of like, you're not going anywhere. So I had three people who all wanted me to run their communications. And so I thought this, I could start a firm. I ended up leaving. I took all three of them on as clients, Point 72 Ventures, Acorns, and a trading technology company called Imperative Execution. And then I sort of went from there. I know we'll get into this later in the podcast with some of the big clients we signed early on, but the firm started to grow very quickly.
Totally. That's an amazing story and a very organic way how Bevel was born. Clients already in place, demand in place, and then it was almost like a necessity that you structure it into a VC, into a PR firm, right? I'm so used to saying VC firm on this podcast. You can understand, but uh, awesome. So once you started, it was off to a great start, right? Then you were servicing these clients, right? And I assume they were also paying healthy, right? So how did you get that mindset that okay, now I want to acquire new clients, right? Now I want to grow this business further, right? So tell us about that journey of acquiring more clients initially, and how did you go about doing that?
Sure. Well, I started hiring day one. So, it wasn't like, oh, I want to just be a consultant and have a couple of marquee clients. I wanted to grow a firm. I saw the opportunity to grow a firm, and the demand was just absolutely crazy, to be honest with you. It was like there aren't a lot of people in financial services communications. And so when you find somebody, it's like, oh, word start to get out and the results matter. Everybody knew the work I had done for Steve, and they saw, some of the early results for Acorns at the time. And Acorns is the app. I don't know if you know it, but you can round up your spare change, and anyone who makes under $100,000 can start investing right away. And it's just an amazing tool and technology to get everyone to start saving and investing. But they too started getting results in Fortune and Bloomberg and the Journal and places where an early stage brand, you just wouldn't normally see them there. And so people were like, oh, who's doing their communications and marketing? This is interesting. I want to work with Bevel too. And so people thought Bevel was bigger than it was. It was really me. And then I made one of my friends, like, she wasn't working for Tommy John's anymore, this underwear company. And so she set up the operations. And then I hired Morgan Borer, who was the second, or I guess the third full time hire. We hired a finance person right away. And so we actually had a larger operations team than a PR team. And then we just started, growing from there. I think when you look at the profitability of something like a PR agency, you have your monthly retainers, so it's very easy to figure out what the profit margins can be, how many people you need to hire for each account. And so that's how we started to grow.
Right. Totally. That's an incredible story. And what was your secret back then in getting into these high profile publications for your clients? Like, is there a secret sauce to pitching these publications, which you know that others don't probably?
I don't think it's a secret. I think that a lot of PR firms take on everyone, and I don't think PR is right for everyone. And so you really need to make sure that the technology is something that the market hasn't seen before. It's an interesting story. The founder is interesting, or the product is interesting. It doesn't necessarily, you don't need an extroverted founder to necessarily have a brand take off. I think people tend to believe that. And my view is there's, a channel and a venue for everyone. Some people feel much more comfortable, writing a piece for Harvard Business Review than they would getting on the main stage at TechCrunch. And that doesn't mean that their ideas, don't matter or shouldn't be communicated. It's just finding the appropriate forum to communicate those ideas. And so we would always craft different kinds of products and services in a very customized solution for each of our clients. And so it wasn't just like, oh, we're going to throw you in with the Sharks, at the Wall Street Journal, or put you on with Andrew Ross Sorkin on Squawk Box in the morning, because some people might completely fail at that and it could absolutely kill the brand. And so you really want to understand who your client is and what their strengths are, and then guide them to some of those opportunities where they might not feel comfortable year one, but they'll feel comfortable year two.
Right. Totally. And PR is again a long game. Like, it's not like you will get guarantee or a fixed number of results every month on month. So it has to be a long term contract. So can you give us an insight into how you structured the contracts initially, and also doing sales initially, because you were a PR person yourself, right? And then building a business is a different territory altogether. So what were the things that you needed to learn initially to do sales or operations or those kind of things?
I think I've had a lot of great mentors. I know that's sort of like, oh, everybody says, oh, get a mentor or whatever, but it's actually true. So Alan Patrickoff, he was one of our early clients. He's still a friend and advisor, and he was just incredible in terms of helping me build the business and sort of see what I didn't know. And, things like during COVID, I mean, I remember he was just like, honey, you need to watch your bottom line like a shark, cash in, cash out. PR marketing is the first thing to go. And he was right about that. I think a lot of running a business, especially a cash flow business, is just managing cash flow, right? And so very simple things like that at the end of the day can either make or break a company. But in terms of sales, I mean, I think I learned a lot when I worked in sales at Moody's under my boss at the time, Dan Parker. He just taught me how to close deals quickly, very quickly. And in PR, the sales cycle is pretty short because generally speaking, if someone's coming to you for crisis, first of all, they should have already hired you years ago, and then you could have potentially avoided the crisis. But otherwise, they needed you like 2 weeks ago. So they're going to sign that contract very quickly. If it's a new brand that's taking off, they'll probably take, I don't know, a week or so. It's a very short sales cycle. And then a later stage brand, it really depends. If there's a moment or something that's happening, an acquisition, it's much easier to get in. Or if they're IPOing, that's definitely an easy point of entry. And then they might just be wanting to launch a new product and bring it to market and incorporate marketing and PR. And so, generally speaking, it's not the same process as when I was selling to the big banks and going through procurement. And it would take sometimes, 6 months to get all of the paperwork and legal and final sign off. So, it's a very different game in PR.
Right, totally. And you mentioned about sales because that's a different territory. And you said you were good at it. You're good at closing it. Your mentors help you in that. So, any tips on how to close deals for our listeners and quickly?
Well, I forget who said it. Time kills all deals. Who do you know who said that? Do you remember? No.
I don't. I'll
Well,
need to look it up.
it's true. So I always had a policy with my team that was we need to get, if we want to take them on as a client, we need to get back to them with a proposal within 72 hours, sometimes 48 hours, because people, you're only as memorable as your last call, and then they can have a lot of other calls with people who might be more memorable. And so I think that, sticking to a fast turnaround timeline, showing them that they're a priority and they're important, and your work style is just a team that's going to hustle for you and work at the same pace that you work at. And that's attractive, especially in tech. These teams are operating fairly quickly. And so you need to get back to them at the same pace they would get back to you. And we were working mostly with CEOs directly. I don't care who it is at the company, but the person who always responds the quickest, in my experience, is the CEO. From any VC, any tech company, they're always on, any law firm. It's like you contact the junior person and you won't hear back for days. You contact the CEO, and I guarantee you, if it's not them, someone from their team will reach out to you the next day. And that was also an Alan Patricoff rule. He used to test me when I moved out to LA. He would call me at 7 a.m. just to see like what time I was getting up and how quickly I was responding to people. So, you
Right,
know, always kept me on my toes.
right, totally. And this quote that you mentioned, "Time kills all deals," is by Eric Huberman, right? And a great quote at that. And you mentioned how so time kills all deals, right? So once you have shared the proposal, there can be a delay in them getting back, right? So following up can become a crucial thing there, right? So how frequently do you drop follow-ups after the first meeting is done, after the proposal is shared, but they have not gotten back to you yet?
Well, I typically, a lot of junior people will sort of wait and then they'll email, and then their nerves and anxiety get to them and then they'll email again. And at that point, you sort of seem like a stalker, right? So I generally will send the proposal and then I'll call the person and just say, hey, I sent this to you. Did you have a chance to review? We're only signing X amount of clients this month and we really liked your brand. And that's true. So we would turn away a lot of things we saw. And so communicating the interest, everybody wants to be wanted. That's just a psychological thing. And so sharing that with the person, and then you get a sense of like, oh, was the budget too high, or is there someone else internally, or is there somebody else you're competing against, and then you can sort of like figure out your next step from there. But email, you'll never really get that.
Right, totally. So I see 3 points there. One is that you need to establish some sort of urgency or limitation that we are only taking this many clients there. So there's some sort of limitation there. The other thing is championing them, that you really want to work with them and why you really want to work with them. And third is trying to fish for the objections that can be there in their mind, but they're not sharing it, right? Which is that they might be a junior and who is not the decision maker. So you want to maybe try to get to the decision maker, or there can be another hindrance that you can guess and pinch it to them that, okay, is this the reason why you're not getting back, right? So
Right.
to some your answer of these three is what I highlighted, and calling is much better than emailing from what I got. So do you always get you I think from what I also run a bunch of agency service based, not PR though, but content marketing. So I mostly reach out via emails, right? Because that's all I have. I don't have their phone numbers, right? So do you always have those phone numbers to make those calls?
Usually, I mean, also in communications, we're working with reporters, and reporters, they'll say, oh, don't call, email. But at the end of the day, when they're doing a story, let me tell you, they will hound you. They will have your cell phone. They will have your mom's cell phone. They will have every single person's cell phone. And they will call you or signal you or WhatsApp you or ping you on every platform.
Right,
So it is still a method of communication. Or sometimes just like meeting in person to close the deal. I think it really depends on the size of the contract and how much you want it or how much you believe in the company and what they're doing. I always think that in person is much better than Zoom. Zoom is quicker for sure.
right,
And you don't have to travel, which is nice. But I think, you can't establish trust really over Zoom. And trust is very
right.
important in PR.
Very true. Totally get that. And you mentioned about contracts, right? So how do you structure your contracts? Because when you're starting out as a firm, you can obviously be more lenient and be more giving in that approach. But as you grow the firm, you can have more structured contracts and more limitations around that as well. That, okay, this is a minimum contract size, this is the minimum duration that we sign clients for. So can you give us an insight into that and how that changed from how you started Bevel and once the firm grew?
Yeah, I mean, I can't share specific pricing, but I can share that we would always do
Yeah,
annual
just
retainers. We believed in long term brands and building it so it sort of has this snowball effect. In the beginning, it's a lot of us introducing you, right, to our contacts. And then as the brand grows, you should be the person who's always thought of, let's say, infertility or whatever you're building. And so that's one thing. On the pricing, our retainers just grew as we started to offer more services and as we became more, just in terms of a lot of clients were asking for marketing services, digital marketing services, and that's part of the reason we did the acquisition that we did is because the buyer, he was specialized in those services, and so I thought it made sense, especially as we went to much larger corporate Fortune 500 companies. They're asking for things that are not just specific to public relations, but really the broad set of communications and marketing.
right, totally. And let's talk about how do you acquire high profile clients to work with you?
Yeah, I mean, we talked a little bit about it, but in PR, if you're good, it's pretty public whether you're good or not at your job. Are you representing brands?
Yeah,
Have you grown brands that people know? Have you changed or shifted a public narrative for someone who is going through a crisis? And these are all things that everyone is consuming every single day. And so, we would get a lot of inbounds from people who knew the work that we did. We had a lot of VCs who would recommend us, founders who would recommend us. And then reporters too. I think the best introduction or the most flattering is if a reporter is introducing you and saying like, oh, they're the best in PR, because generally reporters have sort of like a negative view of, they call them flacks, but publicists, because they think they're annoying unless they're actually pitching stories and sources and things that are interesting and that they wouldn't have had access to and making their job easier. I think at the end of the day, every person, no matter what organization you're in, you want to make the other person's job easier, whether that's your manager, a reporter, the other side, just and in sales, make it very easy for them to say yes. you know.
Right, totally, absolutely agree with that. And in VC type of startups, there's this term called product market fit, right? That has
Mhm.
the product achieve product market fit, and it is typically assigned or judged by if the product is pulling pulling enough customers on its own just by existing, right? That there's such a strong demand for your product that you are actually struggling to even fulfill that demand, right? So is there a product market fit for agencies and cash flow businesses like yours as well? If yes, then what is it?
I mean, for us, we were at the forefront of new technology companies. And so in New York, we went to Miami right before Miami took off. We were in LA. We were one of the first LA tech VC focused PR firms. I mean, even now you still go there and it's mostly celebrity PR. There was not much competition, which was great for us. It allowed us to grow very quickly, but we were definitely specialized. Everybody knew us as the company to go to if you wanted to really build a brand from, let's say, 20 million evaluation to a multi-billion-dollar evaluation, or if you were a CEO and you knew you wanted an exit a year before is a really good time to start thinking about growing your personal brand, the company's brand, so that you can increase your multiples. And everyone wants to know who the founder or the CEO is, whether that's the buyer or investors. So that was a specialty that I think, we did really well at. And if you look
Right,
at some of the
totally. And
bigger players, they're much more
yeah,
generalist, like Edelman, Fleischman. Um, they sort of represent everything, and we were never
right.
known as the firm that represented everything.
Yeah, that's amazing. I think, yeah, that's again a good strategy. If you're entering a new market, then that specificity that this is the market that we are specialized in, and if you're in this space, then we are the best partners for you, right? That actually helps you position yourself better and get to the best type of clients, right? And also it also reduces work for you as an organization, because it's if it's similar kind of companies that you're working with, then it's also the similar kind of reporters that you're working it on the other side, right? If you
Yeah,
work with 10 different kind of clients or in 10 different industries, then you also need 10 different set of reporters to cover those companies, right? So it's a very efficient strategy for PR firms, right?
yeah.
Awesome. And let's talk about managing profit margins. So what are termed as healthy profit margins for PR firms, and how do you manage that while growing the team as you grow your client base? How do you manage that to maintain that healthy profit margin for the company?
Yeah, I mean, healthy profit margins in a PR business are anywhere from 30 to 50%. For a digital marketing firm, they're lower, maybe 15 to 20%. We were always towards the higher end, especially in the beginning, when you're growing quickly and you have a smaller team, but you have a lot of clients. I would say our profit margins started to decline, but were always very healthy, but went towards 30, 36%, which is still quite high. But the reality was, we were paying our people differently. We set up a KPI model that was performance based, where the team effectively they would get paid out based on the wins on the board. So the number of media interviews, number of conferences, the number of awards, and so they were, I don't want to say overpaid, but if you looked at the average total compensation across the industry, they were definitely on the higher end. But that's what, led us to get great results for our clients. We turned everyone into
Right.
these like mini machines that were very, very hungry to get results and very happy to do that. And, when I first started in PR, I was making, I think it was like 32,000 a year. I mean, I probably could have made more at McDonald's, and I remember my dad, I was living in New Haven, and he's like, "Why are you living here?" And I said, "Dad, I work in PR." um,
Right.
so yeah,
And I think in PR, this is also particular about the PR business is that you have to be also somewhat near the location of your clients because you need to accompany your clients to events. Is that the reason, or is it something else?
Well, I mean, a lot of stuff. I mean, before COVID, all the reporter meetings were done in person. Like, it's a very odd thing to have like the AI bots and the Zoom calls with a reporter because sometimes you're speaking with them off the record, and Zoom is just like not off the record, right? So for any more, I guess, where the stakes are higher or it's a very sort of like technical announcement or story or there's a lot of nuances, in person is always preferred. And then you might move to on the record. But that's one
Right.
of the reasons. But yeah, I mean, you'll go to CNBC, you'll go to the different conferences, you'll write the executive speeches for your clients. So you do want to be there with them.
Right, totally. And what were the biggest challenges that you encountered while building Bevel?
I think for me, it's sort of, you know, you don't know what you don't know. We were growing really quickly. I bootstrapped the company. We never took in any outside capital. And looking back, I think, one of the interesting things that I've learned since is just taking on some debt and equity so that we could have grown much quicker if I had made a couple of acquisitions. And I don't think it would have been as hard. I think the way that we grew was challenging because we didn't have the right operations team. We didn't have some of the resources that a firm that was producing the results that we were producing would have. And so, hindsight 2020, I think I definitely would have taken on some growth capital so that the growth along the way wasn't so painful.
Right. Totally, yeah. And these days, I'm hearing a lot of one and done funding rounds where you don't have to raise multiple rounds of capital, but founders are just raising one single round of capital and then infusing that into growth and using that to accelerate the growth of the company. And then that's it, right? Then maybe marching towards an exit or maybe an IPO, right? So that's
Yeah.
another trend that I'm seeing, right? Awesome. Because I don't see VCs being interested in maybe companies like PR or things like that. But there are certainly investment firms that will be interested in models where you're doing that one and done round, that investing in a company
Well,
and
I
then
mean,
it accelerates its growth. Yeah, go ahead.
you could, take on capital from a private equity fund.
Right,
You could even take on debt. And I think,
right,
given the margins, it's a great business to do that. And so I think it's definitely something I would have done. I think for other entrepreneurs who are considering getting into that space, I would highly recommend that. Acquire
right.
another firm that already has an operations team that has a similar
Right.
book of business, and then you double your revenues and your EBITDA, and then your multiples, you'll be able to sell for a lot more.
Right, totally. And just to circle back on a point that you made earlier in the conversation about how you hired your team in a way and you optimized it for KPIs, right? And I think that's a great way to hire when you're optimizing for best results as a company, right? So when you were structuring the compensation, was it structured like, okay, there's a fixed component there and this is the variable component, or was it commission based, that okay, the number of successes that you get or the publishings that you get, the coverage that you get, you will get a bonus per each publication? How is it structured, and did it remain the same throughout the journey of Bevel, or was it just for the early part of Bevel and later you changed the compensation structure? How was it?
So we always had the salary or annual salary, and then the KPI model. I actually adopted it from the hedge fund world. Most of your salary when you work at a hedge fund is in the bonus and is based on performance. I thought that was a very attractive model. I mean, it gets you to work really hard. Everybody wants to get the highest amount of, maximize their bonus potential. So that was something we always did. I would say, maybe it was a little too high, if I'm being honest, but I think, people should be paid what they're worth. And I don't think it should matter if you're 23 and you don't have the same experience as someone who's 40, but you're punching way above your weight and you're contributing to the bottom, or to the top of the firm, the top line revenue.
Totally.
The other thing we used to do is just on the commissions for sales as well. So everybody sort of turned into an entrepreneur, and a lot of people, they were attending these events anyways. And so I thought it would be interesting, one, to compensate them for commissions for bringing in new business, but then also the retention of business. That's where it really falls off in PR, generally speaking. Clients, it's just like burn and churn. And we were keeping our clients for, 4 to 5 years. And so that was really important to me. I value long term relationships. And so I don't want to be working with a bunch of people where it's just like constant chaos and you have to change sort of like, your mental, what you're thinking about, and get up to speed on all these new industries. It takes a lot of work, and we were representing technology and things the world hadn't seen before. And so that's something where you're not only educating yourself, but you're educating the entire market.
Right. Totally. That's great insight there. Uh, and now let's talk about the exit. So the exit is a broad theme here, right? So let's break down this question of how you first set up for the exit. That's the first thing we're going to talk about. Then we'll talk about the process, right? And then we'll talk about the negotiation. Then we'll talk about how long it takes. And then we'll talk about the final aspect, which is handing over the business, right? So first, let's start with how do you set up for an exit?
Sure. Well, it wasn't planned, to be honest. I mean, we had a lot of different companies that approached us to acquire the business. And at first, I wasn't really interested in selling it. But then I thought, oh, okay, well, you know, this could be this could be interesting, and we could find someone who could complement us and really bring the company to the next level, and offer our clients more services and do it more quickly than I could, and really like staff up in some of the key areas like digital marketing, social media, SEO, and all of that. So yeah, we had some strategic partners who wanted to acquire us. Some of the bigger agencies like WPP and ICR and Red Havas, and they basically saw us taking some of their clients, or we were just consistently working with their team when we were coming to the table on a deal or working with some of some announcements, and we would be sort of the sister agency, I guess you could say. And so I thought about, do I want to sell and what would this look like? And then we ran a more competitive process. And we ended up meeting the buyer, Jeffrey Herzog, who is a serial entrepreneur. And he had created the first company in SEO, and he had built and sold multiple companies to, a much bigger success than I had. And so I thought his profile was interesting, and then we decided to formalize the process.
Right, totally. And give us an insight into what was the process of doing the deal and how long did it take?
So due diligence took about 4 months. It was very intensive. They hired an outside auditor, and I mean, they go through everything, like things you didn't even know. You didn't even know were there. They're just like combing through one by one by one by one. It was a very time intensive, detail oriented process. What I would say to other entrepreneurs is be ready for it. I don't think I had spoken to enough people about what it would entail, and to be able to run the company at the same time as you're going through due diligence, especially when you're in a client services business, is incredibly challenging. I mean, just don't think you're going to have any sort of weekends or vacations or even really see the light of day. I mean, that's all you're doing. And it's not exactly what I personally like to do. I like to be working with clients and reporters, and not going through, like every single line item you've ever spent anything on for the business. But that's really what it entails. A lot of lawyers, bankers, finance, operations. One thing I would say that I did wrong in the process is you need to hire a really good deals lawyer, someone who is looking over every single potential thing that could happen post exit, because when you're in the romance period, everyone is like best friends, and you don't think about like, okay, well, what if the markets take a hit, or what if it's not a good culture fit, or there's so many things that you're trying to get the deal done, and it's an exciting time, and everybody's like pushing to close. So having someone who's protecting you, for the post exit, and thinking about things you might never even think about is really important. um, I think Hogan Levels is a really good firm, if I were to recommend one. And then I think, also just making sure you want to sell the business. Many entrepreneurs don't think about like what happens after, and what am I doing? And being prepared for that. I think recently we've seen a lot of different entrepreneurs. I mean, Adam Newman is one of them, trying to buy his company back. There are a lot of founders that I met after the sale who have bought their company back because you go from operating at such an intense speed, and then you're like, wait, what, like, who am I? It's almost your entire identity. And it's something that a lot of entrepreneurs maybe don't feel comfortable sharing, but it's certainly not something that I've seen a lot of people talking about unless it's in sort of like, a one-on-one conversation.
I totally agree. I've heard several exited, post exit founders talk about the post exit crisis that comes into their lives, right? So, have you faced anything similar in that regard, that you don't know what your identity is, maybe because it was too attached to what you were doing, and maybe you suddenly get a big amount of wealth, and you're not completely sure about how to go about managing it or spending it? What should you do now, right? So, give us an insight into that.
Yeah, I mean, I definitely experienced that. Of course, what do you do? I actually met with this investor yesterday who also sold his company. Had a very successful exit to Quest Diagnostics, because I'm exploring something in health tech, as my next venture. But he's like, I have nothing to do. I don't have anything to do all day. I have breakfast, lunch, dinner. I take my girls to school. I'm going insane. Like, so the one thing I would say is like meet with other people who have also exited, because there's so much talent that's out there that is looking for, the next big idea. And so it's a really interesting time. One thing I did, I went to INSEAD has a post exited founders retreat called Peer, and I just found it absolutely incredible. I mean, everything was focused on how can you have a much bigger social impact, and the concept of wealth. And wealth is not just how much, monetary, but how many people or friends would call you if they were in need. How many people did your last company support or employ or help, or how many customers did you have an impact on? And so I thought that was, it was a really powerful thing that I attended, and a lot of time was spent on sort of, not just like what am I really good at, but what fuels you, and how could you really potentially change the world. So those are two things I would
Right.
recommend.
Yeah. Yeah, totally. And another thing I wanted to talk about is, how did you figure out that this was the right time to sell the business? Because founders often face this dilemma: okay, I can spend some more time, grow this somewhat further, and then maybe I can get a much more lucrative valuation, right? So, how did you decide that this was the right time to do this?
It's funny. I mean, the buyer, Jeff, he said to me, "You shouldn't sell. You should keep growing the business." And I probably should have taken his advice, if I'm being honest. I did make an offer to buy back the company, which he turned down. But you never
Is
know.
it?
Maybe, yeah, I did. I did. But
Okay.
maybe he'll come around. But I
Crazy.
I think, if I'm being honest with you, at the time, I always think that personal, family life, and business life, sometimes if one of those is off kilter, then it leads you to potentially make a decision you wouldn't have made. And at the time, in my personal life, I was going through a divorce. And so that I think definitely had an impact on my decision to sell the firm. I had basically given up all of my personal life to build this company. And so I wanted to feel like it was worth it. And when you sell a firm, it has value and it's worth something. And so that definitely influenced my decision. One of the things I've done in the past, like I've always had a leadership coach and a mentor. I think that's really important. At the time, I wasn't working with mine, so he always reminds me of that. But I think that someone who looks at what you say consistently over a period of time, so that it's not just potentially an emotionally charged decision, right? So I think that's important. And so I've started working with him again.
Yeah, that's awesome. But why do you want to buy it back? Is it because you have a strong connection and you crave that connection back again, or is it because you want to get that business back because you think you can grow it better than the present acquirer? What is it?
I think, the one thing that he taught me was sort of that roll up strategy, which I think is really interesting. And doing M&A is one thing that I would love to do, and I have started to do. And so I think there's a lot of opportunity there. And it's sort of, founder's remorse. You sell the company, and then after you're like, what happened? So
Yeah,
it's partly that, if I'm being totally honest with you.
totally. And let's talk about the negotiation process. When you were negotiating with this buyer, how hard did you need to negotiate, and also what are the revenue multiples that are offered typically for such cash flow businesses?
Sure. I had to negotiate fairly hard, but I mean, he brought years of experience, many more than me, buying so many companies. So I think in hindsight, I didn't negotiate hard enough. And as a female founder, I would say that's often the case. You're sitting at the table, and I was in a Zoom call with 8 guys, sometimes more. Sometimes it was me and 15 guys. And so even if you're the most aggressive that you could possibly be, which can be sort of exhausting, to be honest with you, I'm much more feminine in just the way I show up in the world. So I should have negotiated harder than I even thought I was. And then on the multiples, so typically speaking, for a professional services company, for a PR firm, it's about 5.5x, sometimes six, but it's anywhere between 3 to 6 on the EBITDA. So, you know, the higher your EBITDA, the higher the multiples go. The market for sure has an impact on that. And so I think, right now multiples are lower than they were when we sold the business, from what I've noticed. But I do think we're at the beginning of a new cycle. I think that things are about to start coming back. One thing I've been doing since the exit, so even before, I had been investing a lot in some of our clients and had taken equity. And so I've been investing in a lot of different tech companies. And I think we're at the beginning of something great again. And you can sort of like feel the momentum in a way that we saw maybe 4 years ago. And about 2 to 3 years ago, I had 6 exits, and it was incredible. And so I feel like that's about to come back.
Right. So you're saying you had six exit in your portfolio of investments you've made. Is that correct?
Yeah. Hmm.
That's awesome. I think we need to do a separate episode on your investing that you're doing, because that's great success on that front as well. Right. Now, coming to my last main question before we go for the close, what's next for you?
So right now, I've been advising a lot of entrepreneurs on how to build and scale businesses. I've been investing, and then not ready to announce yet. But I have been working on something very exciting in the fertility space, which is taking off. And so it's an area I'm very interested in. The last year I was running Bevel, the revenue, I mean, you started to see a shift, right? We had really taken off in fintech. That was our bread and butter. Everyone knew us for that. Then private equity started to make up a bigger part of our portfolio. Crypto, which, is like highly cyclical, but that was interesting for our business. Then health tech came into play, and there's just so it's such an industry that has not really seen technology just overturn it yet. And so yeah, we'll be ready to announce soon, but definitely more to come, maybe a future episode.
Certainly, certainly, and we'll be keeping an eye out for that. And just to close this out, where can our listeners follow you and like stay updated of what you're going to announce?
Sure. I would say follow my LinkedIn. It's just Jessica Schaefer, Schaefer, and yeah, we'll be making some announcements soon. So you'll all be the first to know.
Awesome. I'll make sure to put the link in the show notes below. Thanks so much for making time for this, Jessica. You've had an incredible journey, and I'm sure there's so much more to come for you. I wish you all the best, and
Thank
thank you for
you.
making time for this.
I
Thank you so
appreciate
much.
it. Thank you.